Tesla having a terrible, horrible, no good, very bad everything, on pace for its worst ever month, quarter, and year.
Has anything ever happened to make you question your entire existence? Well, that's me today, ladies and gentlemen. I was certain, adamant, the flying spaghetti monster was real. Every time I prayed for a discount on Tesla stock, I was sure the flying spaghetti monster was waving his, her, them, they's noodly appendage and giving me the discount I'd prayed for. Suddenly, however, overnight, after praying once again for an even further discount, Tesla stock didn't crash any lower. In fact, it was up a little bit today. Now I'm beginning to wonder whether or not the flying spaghetti monster is real, after all. If you guys have any advice, maybe to strengthen my faith, I'm very confused. I don't like this feeling. Moving along, as you guys can see, still coming to you live from my mum's basement in the hopes of saving some money to buy the dip, but not sure if my prayers will continue to be answered. Time will tell. By the way, I've got something to show you guys. After posting yet another exclusive video on Patreon this morning, I got a great suggestion from one of my Patreon members. Allow me to quote, "Stephen, this is such an amazing video. I think you should tease your Patreon videos on YouTube. I mean, clearly you're doing fine. But it's crazy how valuable your Patreon is." He or she said it, not me. I mean, I also have said it because it's true, but don't take my word for it. But wait, there's more. Here's another comment, same video. "I love when you do these type of videos. I'm so happy I joined your Patreon. I never joined no one's Patreon, but yours was one of the best decisions I've ever made, blah, blah, blah. Thank you again." And another, "Thanks, Stephen. Love this content. Think you guys get the point." One of the respondents, "Right? Can't believe how cheap it is." And finally, "Dude, this is perfect timing. Not knowing this existed, I've spent countless hours this year attempting to create my own similar list in an attempt to rescue my own life and sort out my goals. Having this list will save me a ton of time and energy. 2023 is going to be an epic year. So I think the moral of the story here is don't join my Patreon. There's absolutely no value there whatsoever, and all these people are obviously on drugs. But if you do want to join Patreon because you're insane, you can click the card in the corner or the link at the pinned comment. Obviously, you'll be very disappointed, but if you really, really want to do it, I mean, hey, I'm not going to stop you.
How do we think about Tesla? Tech company, car company, what?
Hi, and thanks for having me.
Yeah.
I don't think that debates that we always had about Tesla, whether it's a tech company, whether it's a car company, or is it a weird amalgamation of tech and a car company, that has not been settled yet, really, right? Because on one hand, if you compare Tesla with Tesla has declined this year with the other technology mega caps. It's the worst performer on the NYSE Farm Plus index this year. It's worse. It's doing even worse than Meta Platforms, which is Facebook owner and about whose troubles we are all pretty familiar with. But I think it also comes back to this argument that what is common, however, especially in this big sell-off this year, is that for most of these companies, that aggressive growth outlook that was built into their valuation at the beginning of the year has started faltering.
Fact check. False. Now, don't get me wrong here. Many investors are panicking, Tesla stock's getting wrecked, but their prospects for epic growth have not changed. Just saying.
And that's exactly what we see.
Well, let's talk a little bit about that, because, we know the underperformance versus some of the tech companies, even underperforming traditional car companies like Ford and GM. But there was that growth story that you mentioned here. And there's been so much chatter over the last few months about some of its production levels, particularly in China, some of the demand levels, the competition out there. Is this sort of that reckoning? The idea that for years, Tesla was the only game in town, the only game in the world for the most part, if you wanted to buy an electric vehicle. And that's not necessarily the case here in 2022, and certainly not going to be the case over the next 2 to 5 years.
Right, and that's a great question. Reckoning is a word that I'm hearing a lot from my sources this year, both bulls and bears on Tesla, right? So it's definitely a reckoning for the bulls who kind of knew that Tesla is a stock that was priced for perfection, and that picture of perfection is definitely seeing some cracks, more than cracks, right? Especially the news that we had over the long weekend about the temporary halt in the Shanghai production plans, and that is kind of combining with another news that we had last week that Tesla was offering this actually pretty hefty and pretty rare discount on its cars in the U.S. so that consumers take delivery of Model 3s and Model Y cars before the year end. All of this taken together is really fueling concerns that demand is or may be faltering for EVs.
Oh, hey, it's me, but in the past, I've just jumped in my time machine. It's now 1909, some shit like that. And we're actually discussing these crazy new automobiles. And yes, we're a little bit concerned that demand may be faltering for these newfangled automobiles. People obviously still want the old horse and carriage.
Which are actually more expensive than typical gas-driven cars.
Esha, I'm wondering about the Elon Musk factor here. I'm looking at a recent note from Dan Ives. He's got a $175 price target over the next 12 months on the company's stock. He is, of course, from Wedbush. He's bullish on it. He said, need a leader at this time for Tesla, not a Ted Stryker. At the same time that Tesla is cutting prices and inventory to build globally in the face of a likely global recession, Musk is viewed as, quote, asleep at the wheel from a leadership perspective for Tesla at a time that investors need a CEO to navigate this Category 5 storm. So what could Elon Musk do, according to analysts you've spoken to kind of fix this, at least, image that he is asleep at the wheel?
It's, again, great question. And what Tesla is really, as we said, like what Tesla investors are really reckoning with right now is this kind of, this was always a double-edged sword, right? Elon Musk is a genius who can alone kind of justify the kind of valuations that Tesla had.
Yeah, but that genius narrative, a lot of holes got poked into that primarily, well, really even before Twitter. But once, of course, we saw how Twitter went down and the purchase of that and some of the emails, I think there was a little bit, of a reassessment, I guess, of what his contributions actually were to the success of some of these companies.
So I'm just going to say it. Anyone questioning whether or not Elon is a genius, questioning his contributions to Tesla, is absolutely not a genius themselves. Let's read the definitions of genius. A genius: exceptional intellectual or creative power or other natural ability. They just described Elon Musk. Second definition: an exceptionally intelligent person or one with exceptional skill in a particular area of activity. They just described Elon Musk again.
Definitely. I guess, the myth of genius actually did better when there wasn't so much transparency into how this genius works, right? But when that starts happening in full daylight, when he's running Twitter on Twitter, and kind of people are getting this idea of blow by blow of how he takes decisions, maybe some of that confidence in his ability to be able to take Tesla and drive Tesla through this impending recession that we are going to see possibly in 2023, that faith is now getting shaken quite a bit.
Tesla having a terrible, horrible, no good, very bad, everything on pace for its worst ever month, quarter, and year. Joining us now to talk about what is going on is CFRA Senior Equity Research Analyst Garrett Nelson, who's got a buy rating on the stock and a $225 price target. Garrett, great to have you with us. I assume at this point you stuck with your buy rating this whole time down. I mean, it's down 69% this year. I would assume you think it's closer to the bottom at this point. What is the primary driver of this tremendous decline that we've seen in your view?
I'll take that one, Melissa. Emotionally induced brain damage.
Sure. Thanks for having me. So obviously there's been a lot of attention surrounding Tesla's sell-off, but to be clear, this is a broader EV sell-off. If you look at Tesla's competitors, Rivian and Lucid, those stocks are down far more on a year-to-date basis than Tesla. So,
all right, it's Dickie McFuckface here from the Ministry of Truth. I just wanted to fact-check because this is misinformation. Garrett the Carrot here is trying to fool you people into thinking that Elon Musk isn't solely or primarily responsible for Tesla stock getting absolutely crushed. Obviously, this is not true. Otherwise, what do we, hang on, sorry, just, war is peace. Freedom is slavery and ignorance is strength. P.S. Tesla's definitely down because of Elon Musk.
We think sentiment has really become overly negative, and the recent sell-off has really been exacerbated by year-end tax loss selling, in our view. But if you look at what happened yesterday, Tesla lost over 11% of their market value in a single day yesterday. And really, what news was there out there, except that they're planning to take little additional downtime at their Shanghai factory over the Chinese New Year in late January. And so we think that's really overdone to see that kind of sell-off on that type of news. And by the way, their China factory is only one of 4 factories that they're currently operating. So
did this guy not get the memo? We're not allowed to use logic or reason or provide any perspective. We can't be rational here. No. We need to be suffering from emotionally induced brain damage. Totally makes sense that Shanghai factory shut down for an extra day in January, therefore Tesla stock down 10%. I mean, Garrett, come on, mate. He didn't get the memo. We're supposed to be panicking right now, blaming, pointing the finger. Elon bad. Tesla to $0 because stocks astrology makes sense.
We think this is a really good buying opportunity following the recent sell-off.
Excuse me. That is not what the stock chart told me.
And, what was remarkable about yesterday's sell-off was the volume behind that 11% decline. So it wasn't just, strange light volume days ahead of the new year, Garrett. It was, 3 times the average daily volume over the past 30 days, which means that there's a lot of conviction in that decline. If you think that it's China mostly, that bit of news behind the 11%, once that gets better, I would think that that's something to look through. But then you still have the outstanding issue of Elon Musk's distraction, the possible damage to the Tesla brand, the high interest rates, which Elon Musk himself tweeted about. I mean, the Y and the 3 are some of the most financed SUVs, EUVs in the market, I should say, at this point. These are things that don't necessarily go away, even if the China lockdown is solved. And we just heard from Dr. Scott Gottlieb earlier. He thinks that, this could be waves and waves of COVID here, which could still be disruptive to the supply chain.
Yeah, we think the pendulum has really swung too far in the direction of fear.
It's almost like Garrett's brain somehow still miraculously manages to function. In all seriousness, I think he's making a pretty important point here. I think fear has completely blinded most investors in the marketplace, particularly Tesla stock investors. Again, hello, valuations. Tesla's forward PE, lower than Chipotle, about on par with Pepsi and Coke. Does that make sense? It does if you're suffering from fear-induced brain damage. If you're not overcome with fear, probably not. Just saying.
And Tesla's not being given enough credit for some potential positives that are ahead. One is we think they could announce a buyback. They've alluded to that in the last few months. It would likely be in the magnitude of $5 to $10 billion. The company's balance sheet was recently upgraded to investment grade by S&P. So they're really in a lot different situation than other automakers, given their balance sheet strength and free cash flow. And the other thing is that their EVs, the lower price versions of the Model 3 and the Model Y will become eligible for a $7,500 federal EV tax credit on January 1st. So next week, those lower price versions will be available for the EV tax credit because of the Inflation Reduction Act. And so, we don't think the market is focusing enough on those things. And, the sell-off has really presented a compelling entry point.
Right. That tax credit is huge. Our next guest thinks investors should brace for more pain at Tesla, but there's a long-term bull case to be made. Gene Munster is managing partner at Loop, and he joins us on the Fast Line tonight. Gene, great to have you with us.
Hi, Melissa.
What part of this goes away in terms of, the COVID situation in China and the Shanghai factory getting back up and running? And what part of this is just a more fundamental story about people not wanting to buy Teslas and Elon Musk's image being tarnished and Elon Musk being distracted at Twitter?
I think probably 80% of it goes away ultimately. You outlined some of this vortex of negativity. Musk and Twitter discounts, Shanghai shutdown, used car price in the macro, all of these, I think, are transitory. To use a Fed term, it can last a little longer than expected, and that's why I think, as someone who is supportive and believes that this stock is undervalued here, I think that there still is some near-term, and specifically very near-term, is the market's going to be on pins and needles related to Tesla until January 1st when the December deliveries come out. The December deliveries are going to not capture the piece of this discounting. 7% discounting might not sound like much for the month of December, but that's going to impact profitability. And so you're going to have I think you'll see a sigh of relief on the delivery number near term, and then all of a sudden investors start to get nervous about what they're going to report in 3 or 4 weeks around the earnings. So we're not out of this. That's why I talk about brace for more negativity, especially given the temperature of the market, and it's a risk-off market. But I would ultimately come back to this question and I forget which of the panelists talked about this today, but is this a tech company or a car company? And I think that, to me, is the bigger question. If you think it's a car company, you shouldn't own it. This means that they're going to have minimal market share, that their margins will go away, that other companies are going to catch up to them. If you think they have some sort of competitive tech advantage around manufacturing, whether it's FSD, batteries, that will yield higher margins than typical, and there's a massive a market that they're getting into. So, Melissa, 80% of this is a vortex over the next month. I think the bigger question investors should be asking here is this a car or a tech company? If you believe it's a tech company, I think you should own it here, despite what the stock is trying to tell us. I think long-term it goes higher.
Yeah, that question has been the sort of the existential question facing all investors for some time when it comes to this stock, Gene. But if you think that 80% of the problems for Tesla dissipate, how much of the market cap returns? How much of the multiple comes back?
I think if you think about 2023 and into 2024, I think, this isn't a stock recommendation, but I think that a lot of it does come back. It's right now, it's trading at 2.5 times revenue. That revenue number may be a little bit too high. I think Apple's good comp on the services hardware, that integration revenue. Apple's trading at 5 times right now. So I think you can kind of retrace. It's not going to get Apple's multiple, but you can retrace some of that gap. And I think, essentially what investors need to see is pretty straightforward. They need to see the delivery numbers. They need to see the profit numbers. We're a month away from getting both of those. I think once we get those and it shows that the line is still intact about the adoption curve, I think that the multiple can have some form of a rebound.
Hey, Gene, it's Steve. So I'm going to ask you what Melissa asked us. What do you think in 3 years out? I'm going to play Would You Rather in an A block, virtually unheard of, with Gene Munster. Would you rather Apple or Tesla 3 years out?
I would say Apple, and the reason is to this idea that Apple is going to get into the car business. I think Mark Gurman from Bloomberg does a great job of covering this, and he's been spot on. If you read his published work, he thinks they're going to do a car. If I'm not willing to say that right now, but if they do get into the car business, that probably has a positive impact. I mean, they could double their revenue over the next 10 years based on a car business.
Question: Apple or Tesla over the next 3 years? Let me know in the comments below. And I know obviously the results are going to be extremely skewed. However, I'm still curious. Apple or Tesla stock over the next 3 years?
Gene, just quickly, because we're out of time. If Elon Musk reduces his role at Tesla, maybe becomes chairman or something along those lines, does the stock go higher?
Yes. I think it does, just for the simple fact, it's reassuring to investors that he's putting his attention. I think that just helps investors sleep well at night. Investors sleep well at night, multiples go up.
Victoria, your thoughts on that very question. Is the company better off without an Elon Musk now?
I don't know. That's a tough question. I mean, he is Tesla. And so when you think of Tesla, you automatically think of Elon Musk. You think of the genius that he has and the innovation that he's brought. So I think that's kind of the competitive advantage that Tesla has right now. Does that wane if he's not there? Maybe, I'm not sure. I mean, I would rather see him reduce his role at Twitter, come in and take that main role again over at Tesla and give some support to that stock. Like I said earlier, fundamentals aren't supporting the pricing that we're seeing. Maybe if he gives more attention back to Tesla and gets that innovative component back there, perhaps we see a little bit stronger fundamentals there.
Call me crazy, but I think she's right. The strange perception a lot of investors have right now is Elon Musk is completely neglecting his responsibilities at Tesla. And obviously, the logical implications of that, if Elon Musk isn't at Tesla 24/7, oh wait, he was never because of SpaceX. Well, let's ignore that. I mean, it's not like that's relevant. If Elon isn't at Tesla 24/7, they'll immediately forget how to produce vehicles at scale. They'll forget how to use the gigapress. They'll forget how to do their software, the data flywheel with FSD, the data collection. That'll just stop functioning. This is actually the thinking of many investors right now. It's bizarre to me. Don't get me wrong. The more time Elon is spending on a single company, the better. But there are diminishing returns. The only reason he purchased Twitter is he had enough room on his already overloaded plate to take something else on. He wouldn't have done it otherwise. But back to her point. I think the signal to the marketplace, to these panicky investors, once Elon has found a new CEO for Twitter, he can finally stop neglecting Tesla. Geez, I was really worried. For a minute there, I thought they were going to go bankrupt because Elon wasn't working there 24/7.
Colin, I know you joined us earlier in the month when you downgraded to Perform on this name. Your thoughts, given the activity, given the fact that, to Amy's point, you have seen some more headlines that speak more fundamentally to the business in recent days as well. Your thoughts on Tesla at these levels currently?
So there's a couple of really interesting things as we wrap up the year and get into 2023. First, this is going to be a year when the pretenders and the real contenders get washed out in the EV space. And so I think one of the things that we've been excited about with Tesla is just the technology leadership. And so as we look at that and look at how many folks really are going to buy EVs and what those unit economics look like, we see Tesla in a very strong position, and that has been a consistent view for us. Now the concern here is that as you have more options on the market and you have some incremental competition for Tesla, and you have Elon out, in and around Twitter, changing the consumer perception of the brand, that some of those folks decide to make a different choice away from Tesla, despite the product being advantaged versus some of their competitors. And that's the thing that really has been a concern for us. And so as we look at these fourth quarter numbers and kind of the intensity that we always see at the end of the quarter for Tesla, it's going to be very interesting next week when we see those results to see how many cars they produced and how many they actually shipped. And then as we look into the first quarter, we're going to be tracking very closely what happens in China as some of the rules shift in terms of the tax credits and other support that we've seen for the EV space, in the early part of the year, and how the sell-through actually works.
As we've seen the stock sell off, it's raised the question again of whether Tesla should be viewed as a tech stock or as an automaker. How do you see it?
There's, I think, three elements of the business. One, it's a material science company that's really done an enormous amount of innovation. And I think one of the things that got missed in the past week was the run rate on the 4680 production. I think that's a very big deal for this company.
This is a very important point. A lot of things are getting lost in the noise at the moment, including the successful continued ramp up of the 4680 cell, an absolute game changer and a money printer.
As they move to a new battery and what it does in terms of range and performance for the vehicles. The second piece is the auto company. They're making cars and they're making specifically EVs, and that's the core part of the company. And then the balance of this is really around AI and what they're doing in terms of navigation with self-driving vehicles and all the other applications for AI. And so we really see it as a company that's really built on those three pillars. You could throw in the solar piece of it, but that seems like a sidelight at this point. But I think it's really more of a technology conglomerate that's solving some very, very important problems and very difficult problems, and has a corporate culture around innovation and meeting the challenge. And so we see them as more of a technology conglomerate, as I said here, but really the cash flow is really being driven by the vehicles, and so it's hard to separate out that cash generation from the auto market at this point.
Yeah, Colin, you referred to what goes on at the end of the quarter as the intensity around quarter end. So essentially trying to make presumably their volumes, and there's reports of these incentives to actually try to buy a vehicle by the end of the quarter. Does that place the 2023 consensus of close to 2 million vehicles sold at risk, the fact that it seems as if they're having to stretch, or do you think that that's a pretty comfortable number?
It's a number that I think is fair at this point. I think we need to see what the real rules are around the U.S. tax credits. Some of the sell-through in Europe is electricity prices are a bit higher than they have historically relative to diesel, for sure, as well as the implementation of some of the rules around zero emissions vehicles in certain EU cities. And I think this 2023 thematic is going to be around testing the market for EVs. You've heard a bunch of stories around folks that couldn't drive their cars because of the cold around Christmas. That's pretty disappointing for a lot of vehicle owners, and it's going to be a warning for folks to buy new ones. But I think this is a real test year that we're coming into, and so I think that the 1.92 million vehicles is a fair number for Tesla. But the question is around what's the cash flow to actually push those vehicles into the market, and the question for us is really around incentives for marketing and these discounts that we're hearing about. That gives us a little bit of pause around what the cash generation might ultimately be. We still think they generate an awful lot of cash, but it's just not going to be the upside numbers that I think some folks had hoped for.
Since we have you, what do you make of the Tesla move? We saw an 11% decline on very heavy equity trading volume. It was like 3 times the average daily volume for the past 30 days, Gunjan. I'm sure in the options market, it's typically the top traded option in the entire U.S. market. What are you seeing there?
I mean, Tesla options are one of the biggest casinos on Wall Street and Main Street. That is a favorite among options traders, and volumes have still been elevated this year. What is interesting is that Tesla options have still been really popular this year. Tesla stock has still been really popular this year among individual traders. It's been one of the top buys among individual traders. So the stock left, the 10 biggest U.S. companies by market cap yesterday after that 11% slide. But it's fascinating to see it kind of retain its popularity among this investor base. And I think a lot of people are looking at this stock and saying it's down 50, 60, 70%. This goes for Tesla and the mega caps. Is it undervalued now? And I think that's one of the biggest questions facing investors right now.
It's almost as if retail investors, mostly, can see through the noise.
I'm watching a stock here that's also being affected by China. It's Tesla. The stock poised, though, to snap a 7-day losing streak, but it's a brief respite for investors who have seen it fall 17% over the past 5 days and a whopping 42% over the past month. Some technicians are even eyeing the $100 level as support. Jared, that's Jonathan Kritzky, our buddy, which was unthinkable only a few months ago, $100 level.
Maybe a few weeks ago. To be quite honest.
I know. China concerns, again, weighing on the stock recently. We'll see. We'll get those. But we'll also get Q4 delivery numbers next week and the new IRA tax credit going into effect next year. So maybe the Tesla bulls will have something to look forward to next year. But the big picture right now is short-term pain right now as we end 2022.
I think the question here going forward, in addition to the demand side of the equation, is how long it's going to be until some of that distraction starts to mitigate just a bit at least, or maybe Elon Musk won't be as vocal on Twitter, so we won't see that backlash anymore. I don't know.
There's an old saying, don't catch a falling knife. This knife is so big and it's falling so fast, I'm tempted to catch it.
Guess that makes two of us, my friend.
But you got to wait for a little bit of strength there. Just want to show you real quick on the Wi-Fi Interactive. This is a month-to-date heat map of our mega caps at the very bottom. Tesla, the worst performer, down 43% this month over the quarter. And Shauna, this is something that I think you've been honing in on as well. Look at that. Tesla right at the bottom, down 58%. Year to date, guess who's at the very bottom there? Tesla down 68.5%.
It's all the proof we need. Tesla prefers to be on the bottom. I'm curious about your thoughts. Where does Tesla go from here throughout 2023? Q4 numbers going to blow people away, reverse the trend? Things going to get worse before they get better? Or do you have absolutely no idea? I'm in the latter camp. And don't forget, if you'd like more content, head over to Patreon now. There's more than 250 exclusive videos and counting rapidly. See you over there. Love ya.